Hey everyone, John here. If you're looking for a place to hold your emergency fund that offers competitive interest rate, protects your money, provides state income tax savings, and allows quick access to your funds, then SGOV can be a great option. In today's video, I'm going to share what SGOV is, why you should keep your emergency fund in SGOV like I do, and as a bonus, how to get one free share of SGOV currently worth $100. Welcome to Park Hyatt Hadi Maldives. Let's get started. Okay, let's get some sunglasses on here. Okay, so what exactly is SGOV? SGOV is an ETF or exchange-traded fund from iShares that holds ultra short-term US Treasury bills, or T-bill for short, specifically ones that mature in 3 months or less. Think of it as a basket of the safest short-term debt issued by the US government. Its yield is tied directly to the current interest rates set by the Federal Reserve. When the Fed raises rates, the interest on these short-term T-bills goes up, and so does SGOV's yield. This is why it pays more than a traditional savings account, especially in today's high-rate environment. I want you to do me a favor and take a look at your bank statement to see what interest rate you're getting. You might be shocked that it could just be 0.01%. That's pretty bad, right? If you have at least 6 months worth of emergency savings, that's what I recommend, by the way, and one of the 9 critical financial steps I went over in another video, then you have a big pile of money sitting there earning almost nothing. When you compare that to the current 4.06% yield of SGOV, you could be making over 406 times more by switching your emergency fund from your bank to SGOV right now. Let's switch gears and talk about how safe SGOV is. SGOV is considered one of the safest investments outside of holding physical cash. Because it holds only US Treasury bills, it's backed by the full faith and credit of the US government. I know, the US government debt is getting bigger and bigger, but so aren't the debt of other countries. Plus, facts are facts, the United States has never defaulted on its debt. The chance of defaulting is considered so low that these assets are often referred to as risk-free. Another benefit is that the interest income earned from US Treasury securities is generally exempt from state and local income taxes. By comparison, if you earn interest in a savings account, you'd owe both federal and state taxes. So, in addition to the higher interest rate and safety of SGOV, the total tax owed is a lot less, especially if you live in a high tax state like New York or California. In my opinion, this is one of SGOV's biggest selling points. This benefit is due to the constitutional principle of intergovernmental immunity. In layman terms, it simply means that one level of government can't tax the debt or assets of another. Before someone says, wait a minute, John, I see SGOV contains like 95% of funds in Treasury bills, but it does hold about 5% in cash and cash equivalents, so it's not all tax-free. And they would be right, but the state income tax is so minor because of how little it holds outside of T-bills. For example, if you put $10,000 in SGOV, you earn about $406 a year. Of those $406, around $20 would be subject to state income tax. So you owed maybe $1 or $2, give or take, depending on what your state income tax rate is. That's nothing to write home about, but good call out. One more advantage is, unlike a savings product like a CD, which locks up your money, SGOV is traded like a stock. This means it's extremely liquid. You can buy or sell shares at any point during market hours, giving you quick and easy access to your money whenever you need it. The beauty of SGOV is that you don't have to buy individual T-bills yourself. The ETF handles all the purchasing and management for you. If you open a brokerage account and deposit funds, then you can buy shares at SGOV just like you could buy shares of any other stock or ETF. Since SGOV trades like a stock, to access funds, you need to sell shares and wait for the funds to settle. This generally takes about 1 to 3 business days. Before we look at how SGOV's price behaves over time, if you enjoyed this video, please smash the like button. It really helps the YouTube algorithm share this video with others, especially for a small channel like mine. Okay, here's the 12 months chart of SGOV. You'll notice a pattern repeating itself. The fund's share price starts at around $100, slowly increases throughout the month, and then drops back down to $100 after paying out a dividend. That's because as the fund earns interest, the value of the fund climbs. Then it resets once the income is distributed to the people that hold shares. As promised, if you want a free share of SGOV, which is worth $100, I partner with the investing platform TradeUp to offer a promotion that gives new users a free share of SGOV and up to 5 additional shares of free stock, along with a cash bonus match when you open up an IRA account. You can claim the bonus through the link I dropped in the video description. Okay, the bottom line is, if you're looking for a place to park your emergency fund or cash for a short-term goal, SGOV is a great option that combines competitive yield with top-tier safety and liquidity. Once you have enough money in your emergency fund, check out my video on the only 3 index funds you need for your entire life. I hope this video was helpful, and remember, start small, think big. Thanks for watching, and I'll see you next time.